Lithium prices have risen almost 500% in the last year, to the point where the Chinese government is intervening in the market. Now, China tells EV battery chain it wants rational lithium prices, so Bloomberg's reporting. That's because of this massive price rise. They're 500% more expensive than a year ago. So the Chinese government has called a range of market participants in the last week, from lithium producers to the main car makers association. They want to discuss the rational return for lithium prices. And that's according to a statement from the Ministry of Industry and Information Technology late Friday. Now, we will have a look at the price movements of lithium miners, and we're going to have a look at the top 6 on the ASX in a minute. But we want to understand more about this Chinese demand for more stability in the prices. If we have a look at the price movements from fast markets, we can see how they've risen in the last month and fallen and moved. Now, we know it's about a 500% rise, but we can see the second column from the right shows us the movements in the last month. Now, when we have a look at spodumene, 6% Li20 in Asia, that's now at 4,625. Price has been increasing 625 in the last month. We have a look at this to compare it to the EV sales in China. So there's a great chart here supplied from Elements, and we're seeing that the explosion in lithium prices correlates fairly strongly, at least in the last couple of years, with the demand and the sale of monthly passenger cars for EV sales in China. That's the green line. In the background, you're seeing that grey mountain. That's the China lithium carbonate price. Also to the right-hand side, we're going to see Tesla switched to LFP batteries for all of their standard range vehicles in October 2021. Now, this is around the same time that Chinese EV sales jumped 160% year on year, with 2.9 million units sold in 2021. So when Tesla and Elon Musk transferred to the LFP batteries for the standard range vehicles, we want to have a look at the chemistry in those companies, in those batteries, we should say, to understand the demand of these minerals resources and how the Chinese government's really been pushed on to have this sort of intervention where they're trying to curtail the price rises. LFP batteries use iron and phosphorus, as you can see on the right-hand side, compared to an NMC battery, nickel, manganese, and cobalt. The vast majority is nickel. So those of you who have been watching Finer Market Points for the last couple of years will remember that we looked at Elon Musk's greatest concern being nickel mines. At the time, he was in the market buying nickel mines or nickel miners, and we looked at how that impacted the prices of nickel miners on the ASX, and we ranked the top 6 for a few months to see where that money, where the investment was also being deployed off the back of Elon Musk's outlook for nickel. But then we have a look at the reports of CNN, which brings us to the recycling component, because iron, phosphate, nickel, lithium ion batteries, not much of that commodity is actually recycled when we finish with the batteries, and that becomes a great concern. So when we have a look, we'll drill down and see from CNN that the summary here is lithium ion batteries. What we're jumping through to is the batteries are valuable and recyclable, but because of technical, economical, and other factors, only less than 5% are recycled today. That's a huge concern, because if we're filling these batteries full of the likes of nickel, manganese, cobalt, and lithium, we need to consistently bring them out of the ground, which brings us back to those leading companies in the ASX. But before we get there, we want to understand how that recycling is evolving. Now, when we do see this report, this was only in the last couple of months from CNN, they also talk about the advancements that are happening in the market. So we're seeing that research, so there's a lot of research to make it more environmentally friendly, and looking to move that from 5%, for only 5% recyclable material. And we have a look in Australia. The CSIRO is a leading research institute in Australia. We can see that they're talking about when their study was performed in 2018, we'll highlight it down here. Australia recycles about 98% of the lead acid batteries. So think of that as your standard combustion engine batteries, your petrol, your diesel, and your hybrid batteries, some of the hybrid batteries. Now, only 10% of our lithium, being Australia, our lithium ion battery waste is recycled, according to that report from 2018 in CSIRO. That may well have improved, but as we see from CNN, it hasn't really changed too much in the last couple of years. So that brings us through to how and why these Australian companies, the top 6 miners that we're going to look at in Australia, the top 6 miners exposed to lithium, How and why they are up between 43 and 71% in the last month. Because recycling isn't really an option for most of these batteries. And as we go through these vehicles, the demand increases, we're going to see the demand for this resource go through the roof as it has been doing in the last couple of years. Now we've got 7 listed here, just because many people like to tell us, did you forget about this one or did you forget about that one? There are a lot in our list, but as we come to the market, as we come to recording, number 6 is CXO. CXO Core Lithium, a very strong performer we've been looking at for many years. The chart shows coming from bottom left to top right, why it keeps getting picked up. Now it has risen from under that 80-cent mark, quickly shot out in early March. You can see the volume rise down here, these bars, the green bars. As it shot out of the gates, it spurred along and then has risen to about $1.20. This brings us to the volatility contraction pattern. We're seeing sort of this congestion pattern here. It's not the first time that lithium miners on the ASX have done it. We have covered this before, back in May last year, when many of the companies started breaking out. Liontown Resources was the first to break out back in May, and that spurred 2.5 months of volatility contraction breaking out. So when we have a look at Core Lithium being one of the early ones to break out, did it in early March. If you go through all the lithium miners on the ASX, you'll find some were doing it in late February in the last week. But for the top 6, we have Core Lithium at number 6. They broke out in March, and that's continued to push them up over the last couple of weeks and get them a strong performance of 46% for the month. Another early mover in that same time was GL1. We can see this movement happening here in early March. 2 strong volume bars once again. We still have Core on the charts here. We're going to go GL1 manually instead of dragging it across. You can see this started moving, coming off their base in late February, early March. Still in that congestion range, but breaking out more strongly in the last couple of weeks. GL1 has pushed on from that sideways consolidation. Now, we've looked at this with Gary Glover and seen that 3 volatility contraction patterns breaking out. This has been a phenomenal example of how to trade VCPs. And we have more detail on that, going through Mark Minivini's strategy of how to trade it and sort of some templates to use in the Australian market. So there is a tutorial you can click on screen or down below to understand more for VCPs and how we apply them. But then it moves up to number 4. The 4th best lithium exposed company on the ASX, Morella Corporation. 1MC, recent listing, as you can see on the left-hand side, also reverse IPO. But the movement from 2 cents up to 3.5 has a strong percentage rise. And what we're seeing here is the volume still increasing in this breakout over 3 cents. So that's good positive movements for a strong move in the lithium exposed companies. Then we have BNR, so Bulletin Resources, 60% gain for the month. We're down at that lower end still. We're looking at lower end share price companies, high share price leverage, but we're cracking over the 10-cent level, getting over 10 cents, getting to 16, bit of congestion, and then popping out with volume breakout here, spurring on in the last couple of days. Now, it was also moving, and as we noted, there were some that were breaking out in mid-late February. This is one of them. This is one of the companies that led the current lithium exposed companies starting to run on the ASX. But we move up to LKE, one of the most popular companies on the ASX for trading. Lake Resources, 67% rise over the last month. Under $1, we have the trading halt here, mid-late February, coming out of trading halt, breaking out from under $1, around about 91 cents, getting over to $1.80. That's more than 100% rise from low to high. Good, solid movement, fast, and we've seen the volume increase as we can see the bars down the bottom. The volume rising throughout this move, which is supportive of a strong base breakout. We've seen it before. You can see the green bars rising and the green bars rising, and then congestion was sold down into this. But then when the breakout occurred again, we saw good, strong green bars showing their supportive volume happening into Lake Resources. Similar movements happening at the moment, and the green line shows the outperformance against the rest of the market. That's got them at number 2. Number 1, SYA, another popular trading company on the ASX. We're looking at 71.51% return for the month, 27% of the week, 178% for the year. This movement is SYA. We're still showing the LKE chart. We want to move to SYA, and there's a good correlation there. We're seeing this movement down, sideways churn, coming back to sit on the former high, congesting in here. Those of you who know how to trade springs will see the opportunity as it came down and showed the inability to trade lower and stay lower. You can click on screen or in the description below to understand more about springs and how to trade them, a Wyckoff trading method or swing trading. Now it's moved from this consolidation and the trading halt 12 cents, getting up almost 100% rise to the peaks, but over 21 cents in the last couple of days. That's SYA. That takes them as the best performing lithium exposed company on the ASX. There are many more. Comment below to let us know which ones you're trading. We'll often see ones you say, let's have a look at these, or did you forget this one? Did you have a look at that? This is the month as we're seeing it cast out by Iris and the total performance. That's why some of those names might not appear there, but let us know which ones you're trading and what the macroeconomic story is you're seeing is the reason behind you're getting into the lithium space and continuing to invest. You can click subscribe for updates, comment below to let us know what you do and don't like, and you can like the video to support the channel. Thanks very much.